Hey everyone, welcome back. Hope you guys are having a great weekend. So I got a lot of questions in the comment sections and Patreon as well about the network hash rate and for Bitcoin going up tremendously here in the last year. What does it mean going forward for us and the miners as well? So we'll kind of take a look at where's Bitcoin hash rate right now, how far we've come this year so far, and then we'll take a look at why it's running up so much. And I have a pretty good explanation on that. And we'll see what impact it has on the miners towards the end of the video, okay? So as always, you guys know this is not financial advice. We're entertainment only. Please do your own research. I'm investing in full companies and coins for full disclosure. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's get really right into it here. So we've seen this year the Bitcoin network hash rate go up pretty much parabolic, you could say almost. We started out the year here in 2023. Where's 2023? Right around December, we kind of bottomed out here right around there. So we were at around 250 exahash in the network hash rate for Bitcoin. Currently, we are at approximately 479 exahash. So that's almost a full double. So almost 100% increase in the network hash rate just going up this year alone. Prior to that, since we were at 250 here, we'd have to be at 125. Where were we at that point? 125. We did go down pretty low here in 2021, obviously with the China news and the miners being basically banned there. They had to move, so that was the reason for that. Prior to that, it was basically 125 was right around here, which was in 2020. So basically in 3 years, it took us to double the network hash rate from that point to the beginning of this year. And then this year alone, we went up double again. So the pace at which we're doubling the network hash rate is increasing. So next time around might be that it might only take us 3/4 of a year to double again, or half a year or something like that. And I'll just keep getting better and better, or higher and higher for that reason. And if we look at historical data that we do have on the miners, going back to 2017, I think this is pretty interesting here. So I'm going to put some stuff on the board here for you guys, and hopefully you guys can see this properly here. So in 2017, at that point, we had the S9 miners, right? And those were approximately 13.3 terahash per second. So those were kind of like the best of the breed there. A lot of miners got those. Those were like the top of the line at that point. They also, in order for you to get to 1 exahash at that point, you needed about 72,000 of these miners to get to 1 exahash. At that point, that cost was around, it was a little bit above, it was greater than $110 million in order for you to get to that point. All right, so that's $110 million to be able to build out to 1 exahash in 2017. Fast forward to today in 2023. In 2023, the best miner that we really have right now is probably going to be the S21, which is also the Bitmain miner. Those things are at 200 terahash per second, right? You're seeing a huge improvement in efficiencies on these machines, everything else. The cost has gone up a little bit from where they were back in 2017 for the S9s. Back then, the S9s were going for like $1,500. The miners might probably get them a little bit better pricing, but that was the price that you could get them for on the spot market at that time. Now, given today's numbers here, they're going for about $14 per terahash, so you're paying about $2,800 per machine. We would now need only, to get to 1 exahash, 5,000 miners, which equals 1 exahash. So you can see how that huge difference between these two here is playing a part in the network hash rate going parabolic. Because right now, this cost right there, if we look at 5,000, what is that? 5,000 times 2.8, that's like $15 million roughly that you would need to get to 1 exahash currently, right? Back then, you needed 110 million, so you could do right around this time, you could do roughly around greater than actually 10 exahash with the same cost that you had back then. So that is also why it's driving the network hash rate to go basically like this, and then we're going straight up on the line here. And that's going to continue to go forward, right? As we get newer miners down the road at 400 terahash per machine, you then will only need 2.5 thousand miners to get to 1 exahash, right? A lot less, you're paying a lot less for it also, and you're able to grow it much further. So at that point, we're going to double again, or triple, or quadruple even the network hash rate at that point. We do still have a lot of miners that are out there that are obviously some of the older generation, like the 80 terahash, 90 terahash miners that are still operational on there. We'll take a look at the numbers that I do have for those to see if they're currently still profitable, which we'll get into right now. And then, but you'll see how the network hash rate actually goes up, what impact it has on the miners themselves and the profitability side of things, and what can explain things going forward. But this right here is the real reason why things are going up so much for the network. It's because the price has come down so much on the miners, the efficiency has increased so much, and you need a heck of a lot less miners to get to 1 exahash than you did before. And that's going to continue going forward. So the parabolic rise that we're seeing in Bitcoin is going to continue for some time being. Okay, so let's take a look at the screen here that we have, and then we'll explain some things here. So on this is my kind of like cheat sheet calculator for as far as miners to see when they are profitable, when they are not profitable, depending on the machines that they have. So depending on the machine you want to buy, so if they have like the 80 terahash miners, which would be here, all the way up to the latest and greatest, the 200 terahash miners, which are over here. You guys can see that hopefully right there. I'm kind of looking to see what is the breaking point on some of these as far as when the network hash rate goes up to a certain amount. So for some assumptions on this, we're using the electricity cost of 4.5 cents per kilowatt hour. The network hash rate right now is about 480 exahash. Bitcoin price is around 43,000. That's up or down, maybe 43.5, something like that. I'm using the average watts of 2950, right? Some of the older machines may not be as efficient than the newer ones. The newer ones are more efficient. And we look at that per joules per terahash. And that just basically calculated what is you take the terahash of the miner and you divide it by the watts. I believe that's the case, or it might be the other way around. I'd have to look into it. But I know there's a formula for it where you just do that and you get the joules per terahash on that. Okay, for the machines. Now, we're also looking at the current block reward being at 900. We know that come halving event, that is going to change to only 450 blocks per day. Let's see here. Or Bitcoins per day. Electricity is what we're getting here per miner right now. Cost per miner, this is on the 30-day mark. And then cost per miner, you have 5, I guess, of those. So that doesn't really coincide here with anything. Okay. So you can see here that currently with the price of Bitcoin being at 43,500 roughly, and this is our kind of middle line here, we can see where things are at. A lot of these miners here are currently profitable with the network hash rate being at 480. Now, we know that the network hash rate is going to go up into the halving event. I'm guessing somewhere around 550, maybe to 575 right now, based on what we're seeing and happening with the network hash rate. So let's increase that to 550, and you'll see how the miners eventually start to lose a little bit of dollars. And this is also taking into account the electricity cost. So this is basically after they pay the electricity cost, this is how much is left for them, right? So this is them being profitable after electricity. So you can see that the 80 terahash miners at the current price of Bitcoin is still doing pretty good. Now, if Bitcoin price goes down before the halving event, which some say might, some say it won't because of spot Bitcoin ETF, but let's say it just drops down to 35,000 roughly. At that point, we should possibly see some miners getting really close to being not profitable at that time. 35,000, there we go. So you can see here that the 80 terahash miner is only generating about 9 cents a day, right? Not very profitable when you include overhead and everything else. But here's the interesting part of it. Halving event comes around, we drop down to 400, and then take a look at this. You now can see exactly which miners are going to be in the green and which ones are not going to be in the green, depending on the miners that they have installed here. So looking at the chart here, we can see that the 80 terahash miner would need to be at about, we need to have Bitcoin at about 49,000 to be just slightly profitable, right? You also have to take into account overhead for employees, other things, general administrative costs, insurance, whatever, etc. Right? You could add on quite a bit more onto this. So we're looking possibly closer to 59,000 for them to be breaking even at that point, right? 90 terahash miners, same thing. We're looking at about 45 to 55,000. The 100 terahash miners being well 41,000 to 51,000. And then when you go to some of the more efficient miners, like the 140 terahash, which a lot of the companies have bought, also we're looking at 29,000 still. So you're still doing pretty good there, right? You're still making pretty good profit on that one. And then when you get to the 200 terahash miners, well, those are still profitable here in the long run. But if the Bitcoin network hash rate increases to 575, you can see how that impacts also things going forward. So this is kind of the way things work on it. Also depends on your electricity. So if you have pretty low electricity, around 4.5 cents, let's say that goes up because you're hosting, that goes up to 7 cents. Well, look at that. most of the chart now, or most of the table now, is in the red compared to where it was. So electricity, network hash rate, Bitcoin price has a huge impact on where things could be. Now, if Bitcoin price starts, goes back up or stays above 45,000 or something like that, maybe even 50,000, you can see how that's going to impact it as well. And at that point, at somebody that has 7 cents electricity for hosting, and we're at 50,000, well, you're going to be looking to at least have miners that are going to be above. Let me see, here's 50,000 mark. So you need miners that are going to be above 130 terahash in order to be profitable at that point still. All right. So that's important to take a note here on how that all works together going forward with the halving event happening here. It's going to be definitely a big impact on the miners here. But if we go back to 0.45 cents, you're doing a lot better. So the cost of electricity is a huge component to this, along with the Bitcoin network transaction hash rate, and the BTC price as well. So I just wanted you guys to take a look at that and how that works. If you guys have any questions on this, shoot me down a comment down below. I am going to make this available to my Patreon members. And then we also have one little thing that I started working on today. I didn't get a chance to finish it all up because I'm actually heading out to a birthday party. But I took in I would say, the top 5 miners that are out there right now. So we got Bitfarms, CleanSpark, Iris, Marathon, and Riot. And I did these in order just for ease. And some of the things that we're looking at here is the same things that we're looking at in the previous table. But in here, we're including more detailed information about the exact miners, number of miners that they have, the current joules per terahash roughly, basically the watts that they're using, their average hash rate, their all that stuff is being calculated into this. So right now, network hash rate being at 48 or 480 exahash, Bitcoin price being at 43,750. I've also plugged in the electrical costs here. If you guys have exact numbers for them, I'm going off memory here and I will update this going forward. This is just to kind of show you guys how things stack up. This is not exact numbers here. Try to be as close as possible. I believe Bitfarms is right around 4 cents. CleanSpark is at like 0.48 cents. Iris is around 4.5 cents, I believe. Marathon, they host, so they're right around 7.5 cents, somewhere around there. And then Riot is around 4.5 cents, but they also get per hour credits there as well. And then we're looking obviously at the average watts for the machines that they have installed here. And we do that by going, what's the closest one that we have to us? Probably Riot here's gonna be the closest one. So I'll show you guys what I'm doing. Down here, let's get rid of that. Down here, where we actually track the miners that they do have installed, I added a column in here and we're actually looking at the numbers of watts or what the wattage of the machine, how many machines do they have of those. And then we're calculating it all down towards the bottom. And then we're able to get the average watts per machine that they have running right now. What is their average hash rate installed right now? And then the efficiency that they're currently in, which is 29.25 based on my numbers here, at least currently. They will have obviously a lot more miners coming in and some offline as well. And they also do immersion cooling, which I believe some of those machines are overclocked. So they may have better efficiencies there or underclocked, depending on how they look at them. Okay, but that's kind of what I'm dealing with here right now on the miner side of things, just kind of give you guys an example of it. And based on this, we can see here that we run some numbers. We can see what the break-even point is on these miners right now, and none of them are in trouble right now. They're all doing pretty good here. This table here is all after expenses for electricity. And then we have the number of miners that they actually have running at the end of November. Daily revenue, what that would be like for them. This would be, daily revenue. This is net revenue, along with the 30 days revenue, potentially electrical cost, what their total revenue would be, and then their profit margin down here. So we can kind of compare things, how they stack up on things. Okay. Okay. So you can see how things look pretty good right now. As we have network hash rate of 480 exahash, block rewards are at 900 right now per day, Bitcoin price being at 43,750. But check this out once we get into the halving event. If things stayed the same as they are right now, then we'll play around with the numbers a little bit here to show you guys how that all impacts things. So come halving, we get the 450 block reward halving event coming. And then here's how things stack up. All right, you can see the Marathon being a higher cost for electricity. You can see that their break-even cost just with electricity at that point for the miners to be slightly profitable would be 47,750. But that's with the network hash rate of 480 exahash. Now, if we increase that to where I think it's going to go to about 550, 575, we'll go to 550 first. You can see here that some of the other miners now start becoming unprofitable at certain price points with Bitcoin. So for Bitfarms, that would be they would not be profitable around 37,750. CleanSpark would still be profitable at that point. Iris might not be. They're looking more like 39,750 to be just profitable with electricity, paying that off. Marathon would be at 51,750. Riot would be at roughly, well, they wouldn't be profitable at 37,750, roughly around there. They would be profitable at 38,750, just barely here. So you can see how that all looks, right? That's with Bitcoin being at 43,750. You can see here, there's kind of our middle line here, and we can see if things go below it or things go above it. Now, if the network hash rate goes actually up even higher than that, than what I'm expecting it to do, which it could, depending on how much new machines get put on the network. And I'm only tracking, with the miners that I'm tracking here, those only equate to about 25% of the network hash rate currently that's out there. So there's a lot of other miners out there, 75% of the network hash rate that I don't track, that I don't see what's going on with it. And we can't really tell what's going on with those guys. We do kind of see what's going on with the miners that I track. We can kind of see where they're growing into it. And we can kind of see, maybe extrapolate that data, how much they're growing, and then maybe see what the other 75% would grow on top of it. And that's something that I'm also working on, but still in the early stages on that. Okay, but here you can see at 600 exahash right now, Bitcoin for these miners would need to be basically north of 41,750, or for Marathon's case, would have to be around 59,750, right? And that's a big thing on cost. So if their cost is around 7.5 cents, that's kind of where we're at. But if it's at closer to 7 cents, well, that's going to have a pretty big impact on them as well. And you can see that here at that point, they would need Bitcoin to be about 55,750, right? If it's not at that point, well, they're going to be in a little bit of trouble, but they got the cash, everything else to go and extend their kind of lifeline a little bit longer. Well, a lot longer. They got plenty of Bitcoin and everything else. So I see no problems there. It's just a matter of where does Bitcoin go here, right? Other things, we'll take a look at the other miners as well. We'll add those in there. Like I said, if you guys have more exact data on the electrical cost for each of these miners here, shoot me a comment down below. Send me the links to the information. Greatly appreciate it there. And we'll see maybe later on this week, coming week, or next weekend, we'll go over this whole list here once we get all the data that I need. But this obviously takes a little bit of time. This took me, I think, almost 2 hours to do today, just to plug in all the numbers, get everything in. So I hope you guys do enjoy it. And like I said, this will be available to my Patreon members here later on today. And then tomorrow, we'll just probably take a look at some of the other things. So I hope this kind of explains things, how they all play out, right? It's not really an easy calculation that you can do with this and go, oh, well, Bitcoin network is going to go up to this point and that's it, we're done. It's not that easy. We have, like I said, 25% that I cover that I know what's going to happen. The other 75% is just unknown, and we just don't know how much they're going to be growing. But we are seeing, like I said, here on this one, where things have stacked up here in the past, where they are right now, and how much less miners you need to grow that exahash. So that's playing a huge role into it. So we'll see. All right. It's definitely going to be going up, is my opinion on this. And that's why the miners need to really grow into the halving event, prior to the halving event. And then they'll probably need to do, or maybe we'll have a little bit of a pause here after the halving event, right? With some of the miners that are at, if we look at the numbers here, like the 80 terahash miners that are out there that still are operating, maybe the 70 terahash even right now, those may be coming offline because they will not be profitable possibly at that point unless Bitcoin is at a much higher price. If Bitcoin's, right around 50,000 here, you can see it on the chart, those guys may come down, shut those off. And there's a lot of those miners out there that could have an impact where the network hash rate actually drops 10, 20%, something like that. And that would be good for the miners that are out there that have the more recent machines out there. They would be more profitable at that point as well. So we've seen that happen before in the halving cycles. We'll see if it happens again this time around. But yeah, I'll leave it at that. Let me know what you guys think. Comments down below. If you have any questions, be happy to answer them as best I can. But this is definitely going to have an impact on the miners going forward and even beyond the halving event this year, going to the other halving event in another 4.5 years roughly. So this is something that we just have to keep an eye on. All right, I'm rambling on here. Thank you so much for coming in to watch this. I hope you guys have a wonderful weekend, and we'll see what happens tomorrow. All right, until then, have a great night. Bye.